Okay, we're on step 3, which is doing our federal income tax adjustment. So as we scroll down here, we're going to see that we have our unadjusted trial balance, all of these accounts, and then we also have our T account balances. Whoops, we'll restart those later. Okay, our T account updated balances from our adjusting entries. So as we scroll down here, it says that we are going to need to use our tax tables that are shown in our text and calculate the federal income tax owed for the fiscal year in the table below. So first off, it says that our total income statement accounts with credit balances, including income summary. So we need to remember what are our income statement accounts. Remember, that's any revenue accounts and expenses. So let's look at our unadjusted trial balance to start and scroll down until we start hitting our income statement accounts. So it's not payables, no liabilities, no owner's equity, and then we should get here to income summary. So currently income summary doesn't have a balance, although it may in the T accounts. And then here's our first income statement account with a credit balance, which is sales. So we're going to add up sales, and we're going to scroll down here. We also have purchases discount and purchases returns and allowances. Continuing to scroll, and interest income, gain on plant assets, etc. Now, let's remember that when we were doing our adjusting entries, we may have had some accounts like interest income that have an updated balance. So we want to use this amount, not the one that's located here on our unadjusted trial balance, because that will give us the incorrect number. So interest income is 447 we don't use. Instead, we use the amount for 584.74. So what we're going to do is we're going to add up these two numbers for interest income, rent income, and then we're also going to go over here to our unadjusted trial balance and take our sales amount, purchases discount, purchases returns, not this number, and our gain. When we add all of those together, we should get a balance of $606,573.76. Now we need to subtract the total of all of our income statement accounts with debit balances, excluding federal income tax, because remember, we're trying to figure out that adjustment right now. So again, if we look up here, starting with where we have income summary, we're going to need sales discount, sales returns and allowances, purchases, advertising expense, cash short, credit card fee expense. Now remember, depreciation was one of our adjustments, so we'll have to look at our T account balances. Same thing with insurance. Miscellaneous, payroll taxes expense, rent expense, repairs expense, salary expense, utilities. We exclude federal income tax expense. That one will not be here. Interest expense, remember, is going to be one of the ones on the T account, so that'll be different, and then our loss. So we add all of those, and then we look at over here, so depreciation and insurance supplies, uncollectible accounts. Interest, remember, was the one that I said was going to be a little bit different. So we want to take this number, not the one that's on the unadjusted trial balance. And when we total all of those, we end up with $530,334.24. So when we subtract those two numbers, our net income before federal income tax is $76,239.52. Now, as we continue to scroll down, we have to use this table to help us find our marginal income tax. Now, you do need your book for this part, as it says, using the tax tables that are shown in your text. So you do need this in chapter 22-1. So it says that the net income before federal income tax is $76,239.52. So we plug that in. Now, when you look at that marginal tax table, it's going to say our tax is 34% of the amount over 75. So we need to plug in that over the amount of 75,000 so that we get how much we're going to pay a marginal tax rate on. So when we do that, it's only $1,239.52. But remember, it's at a marginal rate of 34%. And again, this is all coming from that tax table that's in your book. So our marginal income tax is only $421.44. But remember that there's a bracket minimum. So our bracket minimum where we fall is $13,750. You'll see that on your income tax table, plus our marginal tax rate of 421. So our total federal income tax that we owe the government is $14,171 and 44 cents. Okay. Now, remember that we have already paid some money towards our taxes, and we can figure that out by looking up here at our unadjusted trial balance and scrolling down to our expenses and seeing that we've already paid $6,650, but we owe $14,171. So we need to figure out how much of an adjustment we need to make. So currently this is the amount that we owe. We've already paid in $6,650. So when we subtract those two, our total amount owed is $7,521 and 44 cents. This is the amount of our federal income tax that we need to journalize. So as you can see when we scroll down, we have a general journal, the same one we've been doing all of these in, and we're going to journalize our last one, which is our federal income tax adjustment. So our federal income tax adjustment accounts are federal income tax expense for that amount of $7,521.44, the amount we just found. And then because we have not paid it yet, it becomes a liability for us with a federal income tax payable for the same amount of $7,521.44. Okay, so we head over to step number 4, which is just to put this amount into our T accounts that we had before here. So it says using the information in our question assets, we're going to post the adjusting entries to the T accounts for each journal entry. For each amount that is entered in a T account, a description must be entered as well. So the valid entries, again, remember, are balance, adjusting, closing, or reversing. If an account has a beginning balance, you must enter the new balance after the adjusting entry. So when we do this here and plug this in, we're going to put, I should scroll down here all the way to the bottom. Okay, so our federal income tax expense right now is being debited by $7,521.44. So this, remember, is the adjustment, ADJ. And so when we plug this in here, remember this is going to be the total amount that we owe. So we started with $6,650 and we add that $7,521.44, which is going to give us an updated balance of $14,171.44. And then we're going to come over here to our federal income tax payable. And again, this is going to be our adjustment ADJ, except because this doesn't have a balance in it, that's just our amount of $7,521.44, as shown right here on our general journal. So that's pretty easy. That's all step 4 is just posting into our T accounts. So we'll head over to step 5, which is to do our adjusted trial balance. So what we end up doing here is updating all of our accounts with the correct information. So it says using the information in question assets, we want to complete our adjusted trial balance. So I'm just going to make this happen so it's a little bit easier for us to see. And so they have some parts of our adjusted trial balance already filled in and some they've left blank. So let's look at our allowance for uncollectible accounts to start with. On our unadjusted trial balance, our allowance for uncollectible accounts was $22.32. But remember, when we check out our T account balances, our updated amount is this $3,697.32. That's the amount that we're going to want to put in here and then carry on. So then we also have interest receivable that needs to be updated to the $137.50. Merchandise inventory has a balance of $45,058.15, again coming from our updated T account. Supplies has an updated balance of $126. Prepaid insurance has an updated balance of $1535.80. And then we have accumulated depreciation, which has an updated balance of $8,796.20. Again, when you're doing this, make sure that you're getting them in the correct debit and credit columns, just so we don't get any errors that way. We also have an updated interest payable of $277.58 and unearned rent income of $3,000. Federal income tax payable has an updated balance of $7,521.44. Paid in capital in excess of par value, common, preferred. If there isn't anything under the T account balances, you can check the unadjusted trial balance. I don't believe that we have anything here, but let's just double check. Yep, nothing here, so we just leave those blank. And we come down to income summary. Income summary, remember, is used for the merchandise inventory adjustment, and so right now income summary has a credit balance of $12,900. So we do need to update that. And then we get into our expenses. So we have depreciation expense and insurance expense and supplies expense and uncollectible accounts expense and federal income tax expense. Our interest income is another source of revenue, so we plug that in over on the credit side. And rent income is the same. And then interest expense is another expense, so we list that at the very bottom. And finally, the very last thing we need to do is to do all of our totals. So it's always a good idea when you're doing this to do it probably twice, just to make sure that you get the right answer both times. So when we total this, we get a total of $723, $731, and 90 cents. And they should both equal. Your debits need to equal your credits after your adjustments in order to be ready to prepare our financial statements. So that is all 5 steps of our work together. You can head on over and do the on your own and then also the application.